Hi guys, welcome back to my YouTube channel. If you are new here, my name is Adirinke Lawal. I'm a local practitioner and I major in capital markets operations. What do we do on this channel? We talk about what to invest in, where to invest, and most importantly, where to invest for potential returns. So I think I'll be doing a lot of stock analysis video because the last one I did on Wako, Beggar Paints and Wema Bank, a lot of you guys liked it. In fact, I had like over 400 views, which is quite unusual. My channel is still very small, right? So yes, I'm back with another stock analysis video. In this video, we'll be looking at MTNN, Nigerian Breweries and Custodian Investment Plc. Custodian Investment Plc, I should have done it last week, but yes, I'm again. Let's look at the potential.
Before we go deeper into this video, I just want to remind you not to forget to subscribe, like, and turn on the notification bell because that is what motivates me to keep going and bring you content back to back.
Starting with the first one, MTN Nigeria. This company just posted one of the biggest profit rebounds in Nigerian corporate history. It's moved from losses to over 1.1 trillion in profit in just a year. But the real question is MTN stock still a buy in 2026? From the business angle, MTN Nigeria remains the largest telecom operator in Nigeria and even so one of the most profitable companies on the Nigerian exchange. Total data consumption in Nigeria for 2025 reached an all-time high of about 1.39 million terabytes, which means that average data usage per subscriber has risen to 13.1 gig per month. With more people using smartphones, we have a young digital population and a massive growth in fintech, e-commerce, a lot of people doing remote works and streaming platforms. Data revenue is expected to grow by more than 47% this year. In 2026, MTN should be able to record over 1.5 trillion profits. That would be about 50% growth. Moreover, MTN Nigeria has improved profitability through cost control. The renegotiation of the tower lease agreement triggered a reduction in their operating cost, which means that the company is becoming more efficient. Another big positive is the company's balance sheet. Looking at their reports, MTN has significantly reduced its debt from 1.2 trillion in 2023 to about 527 billion in 2025. It is also interesting that the company paid 15 naira final dividend despite just returning to profit. This means that its dividend yield will get better this year as profitability progresses. At the moment, the stock is trading at 779 naira, but it has a potential upside of about 18 to 20%, which means that we should expect MTN stock to start trading at 900 upward. All things being equal by the end of the year. Another company that staged a massive comeback is Nigerian Breweries. Similar to MTN, it's moved from 145 billion naira loss in 2024 to a whopping 99 billion net profit in 2025. This company's revenues grew about 35% to about 1.47 trillion naira, which is mainly due to price increases across its beverage portfolio. Operating profit surged almost 194% to 205 billion. However, one key reason for the recovery can be attributed to the company's 2024 rights issue that helps to reduce its debt and eliminate most of its foreign currency exposure FX swallow that happened 2024. Despite staging an impressive turnaround, I would think that Nigerian Breweries remains in recovery mode and only Q2 earnings reports can justify its upside going forward. I say Q2 earnings because Q1 results may be impacted by the fasting season. Everybody knows that Ramadan Lent is ongoing and most people are staying from beer during this period, so that may affect their reports. Overall, I would say put this on your watch list. Watch out for the Q1 Q2 results before buying. If you currently hold this stock in your portfolio, you might want to watch till this report comes out. Finally, let's discuss Custodian Investment Plc. A good equivalent or example of this kind of stock in the US market is Berkshire, simply because Berkshire contains different variety investments in different companies. Equally, Custodian also has like different companies in its portfolio. It has shifted away from being a core insurance company to an investment company. Now, this company has delivered steady profit growth for several years. Revenue grew to 222 billion and and about 65.8 billion in profit. Earnings per share rose to 11.19 naira. Also, looking at return on equity, it's around 30% and net margin at 29%. Looking at these metrics, they are extremely strong for a Nigerian financial stock. This means that the company currently runs efficiently. Looking at the business model, also Colossus share price has risen strongly. Thankfully, institutional investors didn't pay much attention to this stock, but now the stock is gaining traction. It has performed extremely well. It has appreciated by more than 100% in the past year, and that is such a huge rally. But the question is, has the stock already run too much? After large rallies, corrections are always possible. So for my long-term investors, I would say this is a solid hold, but for new buyers, I would say this is a buy on dips. This is the end of today's video. I hope you enjoyed the video. If you would like me to do an analysis of any Nigerian stock, comment the name of the stock below and I will do a video on it. Bye. If you're here to subscribe, please subscribe. If you enjoyed this video, give us a thumbs up and also share to your loved ones. See you.